And the total value traded on the FX Commodities Exchange in the week of March the 2nd to 8th was up 58.3% at 3.6 billion naira. The number of contracts traded also went up by 284% at 193,899. Meanwhile, FX Commodities Index, the Export Index, and the deal were in the red. For more, here is Michael Martins, Portfolio Manager at FX. Good morning, Michael. Thank you very much for joining us on the program. Well, first take us through activities at the commodities market in the week under review. What is the cause of the recent upsurge in market activity on the exchange?
Good morning, Chimezie. Thank you for having me once again. So if you look at the table in front of you, you would notice that there has been significant market activity occurring in the exchange over the course of the week, particularly with the total value of transactions, right, going from 3.6 billion to around 12.1 billion naira. The total number of contracts also went up by 284%, right, from around 193,000 contracts to more than 740,000 contracts. The total number of deals, however, fell by 21.13%, from around 194 deals to close the week at 153 deals. The ACI, which is the FX Commodities Index, also had a negative week, going down by 0.89% to close the week at 398.79, while the FX Export Index, which is the AEI, also fell by 1.29% to close the week at 160.69. If you look at the next table, the next chart in front of you, speaking to the volume of contracts traded on the exchange over the course of the week, you would notice that there has been, or rather that there was, significant market activity on the exchange, particularly with maize growing from around 170,000 deals to more than 700,000 deals on the exchange. Soybean also traded up in numbers over the course of the week, whilst paddy rice and sorghum traded a bit less. If you look at the export commodities from ginger, cocoa, and sesame, you would notice that there hasn't been significant market activity, especially with regards to volume going on with export commodities on the exchange. And with cocoa in particular, you would also notice that the reason why that is because the main crop season has sort of exceeded, which usually starts from the month of October and then ends at the month of ends in the month of February. So what we're seeing in the market currently is just an introduction of light crops causing lower market activity. With regards to pricing, the only major gainer that we had in the week was soybean, which went up by 1.76% to close the week at 31,644 naira per contract. And the losers for the week were essentially paddy rice, ginger, and sorghum, which went down by 3.74%, 2.50%, 1.61% respectively. The only other asset under consideration is the fair trade exchange traded commodity, which lost 1.01% to close the week at 14,161 naira per contract. With regards to the upsurge in market activity, and you would notice if you go back to the volume chart, there was significant market activity, particularly with maize, and that's partly due to the fact that I'm pretty sure we've discussed some of this during the program before. The asset-backed commercial paper that we issued a couple of months ago. So a lot of that volume is now currently going through the exchange, causing an upsurge in maize in particular.
Well, thank you so much, Michael, for that review. For retail and institutional investors who want to partake in the commodities market, how does the commodities market fare in comparison to other traditional asset classes like the stock market and fixed income? How does it compare to these?
So if you were to compare the different asset classes, so just using their indexes, right, as a proxy for what is going on or what has gone on in the market, right? So, for example, in the commodities market, we tend to use the ACI and the AEI as a proxy for the commodities market, and the year-to-date return for the ACI is somewhere around 24%, and for the AEI, which is the FX Export Index, is around 13%. If you compare that with what you currently have in the Treasury bill market, depending on the tenure that you're looking at, right, you're looking at rates between 2% to 6.5%. And with the stock market, you'd essentially also be looking at the NSE All Share Index, which is down year to date. But that's just a competitive comparison. For people that want to invest in the commodities market, whether or not you're a retail or an institutional investor, the commodities market right, represents an alternative asset class that enables you to balance out your portfolio. So, which is why I said beyond even the competitive asset class comparison, you can then begin to design a portfolio that you understand that is balanced, such that when one asset class is going down, the other asset class is going up, and then you can then have a competitive return, risk-adjusted return on investment. But beyond that, right, that's just a financial implication. When you're investing in the commodities market, because the commodities market is so correlated and it contributes a significant portion to the gross domestic product, every single naira that goes into the commodities market contributes significantly to the broader economy. But beyond that too, right, every single wealth that goes into the commodities market, a portion of that wealth is transferred to the smallholder farmer who cultivate every single season, year on year, right? So, and every single naira does so help to improve his livelihood and income. Now, I don't know about you, but I don't know that many an asset class where you get to make a lot of money and also make impact at the same time.
Right. So, okay, Michael, tell us a bit about the common trends in the commodities market, particularly with grains and export commodities.
And this is speaking broadly, because I don't believe that we have enough of a time to go into the detail of each respective commodity. If you're looking at grains in particular, right, you notice that their season tends to start around the month of October, which is when you see most of that harvest volume come into the market, and it sort of draws down over, let's say, arguably between an 8 to a 9 month period. Now, for people that want to invest, whether or not you're a financial player just looking to take a position in either the spot contracts, or you're a processor that you're looking to gain significant market exposure so that your own cost of production is low, ideally the harvest period is when you want to partake in the market and take a lot of your positions, because essentially what you tend to see over time is that you tend to see supply reduce, because when you see the supply volumes is usually not in the same volume with what you would see at harvest. So what you see is that supply would dwindle over time, and then demand very usually outweighs supply, causing, by the simple law of economics, causing prices to rise over that 8 to 9 month period. But for export, it's more or less the same thing. There are just a few slight differences that you would see in comparison to grains.
Okay, just before we let you go, explain to us the dynamics involved in the Fair Trade Exchange Traded Commodities, the FETC, which you mentioned, during the review.
So the FETC, it was an innovative financial product that we came up with at the exchange in order to allow retail and institutional investors gain exposure to the commodities market. So as opposed to just taking singular positions in spot contracts, which had an arguably a high risk adjusted return on investment, we wanted to create a product that would allow retail and institutional investors gain exposure into the market. So the way the FETC is sort of designed is designed like a basket of commodities that you can take a position in, as opposed to just taking a position in an individual commodity. So that's essentially the dynamics of the FETC.
All right, thank you very much, Michael.